Yo, alright, today is Sunday. I didn't do a video on Friday because I don't really look at the charts on Friday after I'm done, on Saturday even. Just because I don't really want to just look at the charts constantly after trading Monday to Friday, just kind of because I feel like the less you do in trading is the more in trading as well. I mean, I could have easily looked at the charts all of Friday and all of Saturday. I have done that in the past, I don't know, 4 years of trading, but now I've gotten to a stage where I don't need to do any more back testing or anything, because I know what exactly what I need to look for, and that's it basically. Quick water. Alright, lovely. Well, I've talked about, I'm not sure when I started this, was it Monday? Now it's the 16th or like 15th, the trade day, whatever. But yeah, today's video is going to be about Friday's trading. I'm just gonna, I kind of decided that every day I'm just gonna show you a blank chart and then gonna go through my thesis of my thought process and then how I get into the trade, which is obviously the trade that I took for the day. We did catch a short on Friday. I really wanted a long, but my bias did change. So yeah, so coming into Friday, let's start a new one. There's a 2:30 here. Come to Friday, first thing I do is just kind of see what liquidity we've left and what liquidities are intact and have been tapped in and everything. I don't really go, that's the main thing first for me, is like liquidity, and then I go high time frame, see what other stuff have been left over. So on here, as you can see, I mean right here you can see, I think on that video I said that this consolidation wants to get taken because from this whole range as well. Okay, so I'm getting ahead of myself straight away. Let me chill out. Alright, so we got Asia highs here. Asia highs intact. You got PM here, but it's got a high which is made outside of kill zone, and that is still relative as well. Why is that so big? I don't know. There you go. I don't like that. Change that to that. Change that to that. Just a little simple. So this high's outside of our kill zone. So for me, it's not a very I say like fulfilling high or very strong high because it was outside the kill zone. Extremely simple. These ones as well outside the kill zone, so they can be used as liquidity points, very easy liquidity points. Another thing as well to keep note is that realistically from this point here, yeah, messed up right on. From this point here, we haven't really taken any liquidity whatsoever, and then this Asia, look at that consolidation, that's just bound to get taken. Banging low resistance liquidity, and then low resistance liquidity going all the way down, which then in London we did end up taking some of that, but we just stopped before New York opens, which is exactly what I wanted to do, wanted to happen. So now that I came to my liquidity, and my liquidity was longs because you got all this liquidity above here, then I go up in time frames. You got the 1 hour. Okay, I go straight to 1 hour, and I can see that from this range to this range here, we haven't hit the 50. We got 50 there, and you could draw that range here as well. So we draw the 50 there as well. Yeah. So we'll just change these real quick. To the 50, to the 50, 50, and then 4 hour. What do I see? 4 hour, I see an untapped fair value gap above us as well. Bear in mind that price is down here. I've got all these untapped fair value gaps, untapped 50%, untapped 50%, and low resistance liquidity. So now you're getting like a massive magnet to price, which is up here. So that's where it's very important that where is price like to draw to these areas. Untapped H4, so we got that 50%, and you've got Asia intact, You got New York, basically relative, but that is outside of a kill zone. So yeah. And then down here, I just like drawing them out because then I have to turn this thing off. I got London low. So then I just turn that off, and I can see myself today. My bias is bullish. I want to take longs to up here. Another thing to keep a note as well is like, what did Asia and London do? So Asia we consolidated, London we manipulated, and then we manipulate out of that. So you could expect New York to be a continuation. If Asia consolidated here, and that's the other thing as well, we took this liquidity here, but if we consolidate around this area, and you want to know what consolidation is, because this is a manipulation up, down, no, down, up, wrong way. But we could say that London manipulated, so what's most likely to happen in New York is for it to come up or to come down and then to continue up. That was my thesis, that's my probability, that's the probability I want to be seeing. That goes back to their probability mindset. Everything's probabilities. So what would be the best case scenario in New York AM? If we go to the time frames as well, in all of this, we have got this 30-minute fair value gap that I would like to see get tapped into to then go up. Yeah. Another thing as well, that was my ideal scenario, but we did have this 1 hour inverted fair value gap, but I would much rather wait for it to come here to this to then go up. So I didn't have this level, I had this one, because on top of that as well is you got these relative equal lows. So if you take that liquidity, then you're going down to then go up, which is, it's extremely simple, but it needs to have a little narrative behind it. You're going below liquidity, which is what you want to be buying, and you're buying into a bullish fair value gap. So that was my plan for the day. Was really wanted to patiently wait for this to get tapped and then go up into Asia. So what do? We opened here. Yeah, this was my level for 9:30 open, which is 2:30 for me UK time, 9:30 New York time. So just after this, I just sat patient and just waited for price to do his thing basically. So here I was thinking, boom, this is looking nice. So this is when my mind was going to this fair value gap that is forming, because this would have been prime as well, because this would have gone into this, and hopefully there would have been SMT as well with ES. But what ended up happening was we completely violated that fair value gap. So my idea is still intact because all that high liquidity hasn't been taken. And as well, what you're making is you're not going into this 30-minute fair value gap, which is a very important liquidity as well. Very good draw on price down. So if I was to long here, this is my thesis now. If I was to long any of these inversions, my stop loss would be at an equal lows. And I don't really want that, to be honest with you, because there's plenty of times where, I mean, these equal lows is what you want to be attacking. That's what your trade wants to be going into that. So now you're in an unbiased place, yeah, because you've made equal lows. Your stop loss, if you were to long here, long there, for example, yeah, your stop loss would be equal lows. Not good, or not. The probabilities then are not really in your hand, in my opinion. So that's why I didn't look at that whatsoever. I was just waiting, extremely patient. So then what ended up happening was the ideal scenario has been taken, which is up, taking Asia, taking that high outside of the kill zone, and actually going into the H4 fair value gap. So all that low resistance liquidity has been taken. So now what you're doing, what are you doing currently in price? Now you've taken high liquidity and you're leaving equal lows. On top of that, price is currently trading above the 9:30 open, so we're in premium for the day right now. This was discount, premium, and I'm pretty sure this was an SMT with ES, but none of them went into the 30-minute, and that's what I wanted to see, so that's why I didn't take a trade. And did I feel missed out by missing that trade? Because that was literally my whole bias, that was my main plan for today. Yeah, a little bit, but you live to another day, so that's what that matters. you get to trade another day, and that's just part trading. Doesn't not matter whatsoever. So here I really then wanted it to look very clean. To be honest with you, I was thinking of taking a short, or not taking a short here, but keeping this fair value gap in mind, that price could draw into. Yeah. Because we're above 9:30 open as well, so it could definitely, if it goes to here, it could definitely come into 9:30 open, to then do its thing, you know, just draw into that area. So 5 minute here, 1 minute here as well. Just kind of see what price is doing. I was then, in my head, to be honest with you, I was thinking, I'm not gonna lie, the only thing you've done here is going into a 5 minute fair value gap. You're still respecting that, so we could still be going up. So then we did this thing, then we had a massive pump up, and this is nice because then now we've created our own another range. We created this range, swing high to swing high, and we've actually bang on here into that 50% of the big 1 hour, or the actual 1 hour range. As you remember, that one to that one to that one is, yeah, I said that. But the other thing as well, yeah, I am kind of contradicting myself here. I know we made equal highs here, yeah, but there's been enough time in I've done this for so long now, I get kind of see it. I don't know how to explain it, but for me that was a good place that now we can reverse at least to this 5 minutes to then go up to then attack these equal highs, because I'm pretty sure this was a SMT. If I'm wrong, then I'm wrong, but I can't remember Friday's trading. Where can I spot this on the 1 minute? Yeah, I think I'm pretty sure. You see my crosshair? There we there. The 1830. You can see that here, which is there, crosshair, we didn't take it. So it's an SMT there as well. And we reached the 50%, which is really good. So we retraced to the 50, and now we can expect price to come down. That was my thesis. Because price is cheeky as well, like it wants to really come down lower to then really go up. That was just how I kind of view the market. So we had the SMT in place, and then we create a new range, and then we had this 5 minute gap here that I really wanted to see get inverted to then ultimately go into here and then to there. And then my ideal scenario would have been we invert this and we do its thing, we stop before we take the liquidity. Yeah, if we were to do this, I'll probably cancel the trade. But if it did this and then come back into the inversion, could even be here or another one up here, then I'll short to there. That's ideal. So what did price do? We're respecting that. So it's another thing I like seeing as well, is that if we start respecting this fair value gap, that means they're utilizing this fair value gap. And once that gets disrespected, then yeah, it wants to go down. So here we ended up closing, and I set a limit order here. So limit, my stop loss was there, and I was aiming pretty sure there my break even point, if we then go to the 1 minute, was this place. Actually, I think it was that because I had no bottom wick. So I was in plan. We ended up not wicking, yeah. And then I thought, okay, this is gonna go all the way down now. It's not gonna come back here. So I cancelled that. And then I really want to see what kind of story the 1 minute is telling me. Yeah. My break even point got hit, but if I get in, that will still be my break even point, pretty sure. I'm not sure actually, I might be wrong here, but we'll just keep it there. So what happened? Here I was thinking, yeah, damn, okay, so this is definitely gonna go and top that. But we start shooting up, leaving this low intact, creating that low resistance liquidity. Very good, very nice, exactly what I want to see. Because then we're creating strains in the market, and we've got a 5 minute untapped fair value gap. Yeah, and we're above 9:30 open, and we still got all these good lows. But what have we done prior? we're taking all this liquidity and gone into an H4. So then you can kind of see how the tables kind of turn. So then and then I went back to the 5 minutes to zoom out quickly, and then I saw that I got rid of this idea. Yeah, the idea for me was kind of gone now because we're respecting this 5 minute thing here, but that's not my model. I like getting into an inversion because then that means the order flow has flipped and gone into my most likely drawn liquidity. So I saw here that we tapped into this 5 minute here on the 1 minute as well. Lovely wick into it. It's a lovely wick as well. Very, very, very good, very good. We have this 1 minute inversion. I was thinking, brilliant, we haven't taken this, so this is going to be another A+ setup. We're going to invert it instantly. Yeah, thinking, damn, that really wants to go down. I'm going to put an order here. Yeah, and my stop loss is just going to be just there. And I'm going to take it all the way to there. Yeah. So I get in, and then what happens? I get tapped in. I'm a little bit in profit. Yeah, I'm not sure my break-even levels. I think my break-even point might have switched to there now because there's a swing point. I think that's what happened. And then ultimately, I got stopped out. Yeah, got stopped out. I don't think the idea was wrong. My draw and liquidity, I don't think it was wrong whatsoever. This is just part of me. Let's just say, I mean, when you come into a loss, yeah, I have done some calculations. Right now, currently for October, I am on. It might be higher, but October, I'm like middle of September. Now I've started trading the Nasdaq. I'm on 88% win rate. I only lost 2 trades in that current period, and I know all of October. I had a piece of paper somewhere with all my wins and everything. But yes, technically what I'm trying to say, this is my first loss in October. So it's not the nicest feeling, but then I had to bring myself down to reality and start thinking about this long term. Because trading is long term. Because this trade ain't going to dictate my whole trading career, you know. Is what I'm going to do in the next year, 2, 3, 5, 10, 15, 20 years, etc. This is me, the way I look at it. It's just basically you paying your taxes in trading, you know. You're gonna get L's, they're all gonna come, you know, in your hand, or the probability just didn't go in your hand, and you end up getting stopped out. Would have been very, very nice if this break even got tapped into, because then obviously I would have got break even, saved my capital. But hey, you ain't gonna win all of them. But when you've got a very good, reliable strategy with a very, very strong patient mind and a very disciplined mind, not disciplined thinking like, oh yeah, you need to hit, not in like in the discipline. What I'm trying to say is, and not in the discipline regarding like, oh, I need to hit the gym like every single day. It's the discipline to stay patient on just waiting for your model, or waiting for it to look extremely, extremely, extremely clean. And actually as well, staying disciplined, just to take one trade or one loss, or if you trade two trades per day, sticking to that, and that is it. That's how you stay in the game. So when I'm just getting topped out ever so slightly, yeah, I don't really see another problem with it. The only thing I do see is it went into a 6 minute fair value gap. No, was it 6, 7? It went into a 7 minute fair value gap after stopping me out, and then ended up going down. But I would have never gone into the 7 minute and done that. You know, like this is a nice move. We come up, invert that. Wanted to go down into the ultimate draw. I don't see anything wrong with that. The only thing is that was just the cards I was dealt, and I got stopped out. As simple as that. There's nothing else much to it. You know, like I'm not gonna, you know, there's literally anything. That is all there is to it. You know, I can't really bring anything else because that's kind of your ego then speaking. And in this game, it does not matter whatsoever. You either win or you lose, or you have a break even. Done deal. Emotions don't really matter in this whatsoever. So then when they're happening, literally as soon as we got stopped out, price went to there and just carried on going lower. So a little bit of a bummer, but hey, that is what it is. So yeah, so that was my trade. I think I'm gonna, as I said earlier on, I'm gonna start doing this sort of trades where I start from scratch. Yeah, I start from scratch and then draw all on my TA and then kind of my thinking process on what leads to my trade. Obviously, here comes down if you might think, okay, you're doing some replay data. I mean, you either believe me or you don't. That's really up to you. I don't really care, to be honest with you, because this is my trading. But I'm gonna keep it real. This is the trade I've taken, and all the other videos is the trades I've taken. But I'm gonna start doing this sort of trading because I don't know. I just feel like it might be quite a good idea, just starting from scratch and then my thinking process, and then show you the actual trade I did. So yeah, first loss. I'm gonna get rid of all this. First loss in October, not bad. We obviously Sunday now, past 11, so we have opened, and I mean, seeing this for tomorrow, which is basically today. Nah, not yet. 15 minutes is Monday. But ultimately, what we've done now, if we've made all them equal lows, we've still got 30 minutes untapped here. But realistically, you want to take some major liquidity before coming down. I say realistically, I don't actually know. That's the other thing. We don't know. Asia could open up. We definitely can pump up here. Or we consolidate around this area. London manipulates early morning, Monday, crashes, and then New York continuation to these lows here. Because now that you look at it, yeah, it's another thing as well. Is if we were to get rid of this data here, yeah, let me get rid of this. Start new. Yeah, pre-New York here. Yeah, you could say that here we consolidated, we manipulated, and then we've gone up. Yeah. Now in my head is that we consolidated with a manipulator while creating equal lows. Yeah. I mean, it's not really like a very strong manipulation. There was a manipulation to these, but now that I've taken, I see this kind of as a consolidation now. London, we consolidated. We then basically consolidate around this area, create equal lows, 30-minute fair value gap here, and then we're just going up slowly and surely. But every time we do go up, we don't take liquidity. Don't take liquidity. We do a little bit there, but it's a painting. Yeah, training's not perfect, it's a painting. So yes, and we have made this gap, which we have not filled fully, but to be honest, I don't really use gaps whatsoever. I just know they're a bit of a magnet surprise, which was the other day over here, down here, which we caught that long there. But yeah, alright, I'm gonna cut that there. The next video is probably gonna be tomorrow, Monday. I'm talking about Monday's trading. So yeah, cheerio, adios.